logistics in our mind almost, and let me use this word, this phrase loosely, it seems that we are in the wild, wild west, or wild, wild east, you may call it, of logistics. If you look at logistics as a sector, traditionally for the last 50 odd years, while significant improvement has happened in building of more roads, railways, etc., etc., a lot of the tech innovation, services innovation has not happened. And there is an opportunity for most entrepreneurs, either who are already running logistics business or people who are getting into logistics business, to organize that market and make it a lot more efficient.
Thank you everyone for joining in. So happy to see the fraternity here. Hope you're all in good health and are keeping safe. And thank you very much for taking the time out and joining in during such a difficult time. It's such a big privilege and a pleasure to reconnect with everyone, our distinguished panelists who are handpicked because of the think input and the rich experience that they bring in. And thank you to our distinguished audience for joining us. We've received over 150 registrations, most of whom are senior leaders from the sector. Many of our members and are also repeat visitors to our webinars, which is very encouraging and motivates us to provide even higher levels of dialogue through the online channels as well. For those of you who are new with us today, the Blue Circle is an exclusive community and knowledge platform which is curated for business leaders across 6 sectors, which are logistics, healthcare, e-mobility, energy, real estate, aerospace, and defense. We also present socioeconomic insights which ultimately determine the evolving complexion of the market. In response to the COVID challenge, the Blue Circle has also accentuated its digital presence. One of the many modes we employ is our weekly webinar series and our digital publication. In addition to this, and you'll be happy to know that we've recently launched the first version of the Blue Circle community app for leaders, somewhat like the sector-specific LinkedIn for leaders, a space that brings together leaders to have meaningful conversation, connect with each other, house high-quality curated content, and provide access to business opportunities across these sectors. So those leaders who are interested, please do join us. I will share the link to the app in the chat section as well, and we'll be soon sending invitations to our new guests post the webinar as well. Currently, we're on iOS and our Android version will be live next week. We've also begun our selective outreach and have close to 3,000 members on the wait list. Today, as part of our Investment Month series, we're privileged to have big minds, leading thinkers, and the backers of the industry join in for the Logistics Circle's discussion. The first wave of COVID turned the spotlight on the vital importance of logistics and supply chain. All the 3 pillars on which logistics stands, that is transportation, storage, and administration, are sharply illuminated. Despite the many leaps this sector has taken, the cost of logistics in India is still double that of the Western world. The runway of growth is long, and there is great scope of development in infrastructure and technology. We've invited thought leaders to discuss the way forward and the challenges we're facing in this sector. In the best interest of time, I will just briefly mention the names and designations of our panelists. We have with us Mr. Ashish Sharma, MD and CEO, InnoVen Capital, Mr. Ankur Bansal, co-founder and director, BlackSoil Capital, Mr. Pankaj Makkar, MD, Bertelsmann India Investments, Mr. Sushane Chopra, Senior Director, Gaja Capital, and the chair and moderator for the session is Mr. Bitan Datta, MD and partner, BCG. Thank you very much, sirs, for joining in today. And now I request Mr. Datta to please chair and moderate the sessions.
Thanks, Siddharth. Pleasure to be here with all of you today. A very, very good evening to you, and I hope it's a good hour full of rich discussions. As Siddharth mentioned, I'm Bitan. I'm a managing director partner based out of BCG's New Delhi office. I lead the firm's manufacturing and supply chain topic in Asia Pacific. And I'm very glad and keen to be hosting this discussion today on how investments in technology and infrastructure are reshaping the logistics industry in India. With me today are 4 people from the investment fraternity who are actively looking at the logistics space, both actual logistics service providers as well as potential tech plays. I would just request each one of you, starting with Ashish, probably to just introduce yourself briefly and your interest in the logistics space that's there, and then we'll very quickly jump into the discussion.
Hi, Bitan. So, so I run InnoVen Capital. So we are one of the leading venture debt providers in the region with the offices in India, China, and Southeast Asia. And generally, before that, I had a long stint with GE and GE Capital in India and globally. So I used to run GE Capital, wherein we would have a bunch of financial services businesses and have some experience, investing in both equity and debt in the logistics space. If we look at our portfolio here, we have made 8 to 9 investments in the logistics space, in India, and also made a few investments in China and Southeast Asia as well.
Perfect. Thanks, Ashish. Ankur, you want to go next?
Sure. Thanks, Bitan. Hi, everyone. This is Ankur here from the co-founder of BlackSoil. We are an alternative credit platform. We basically provide structured debt, venture debt, and even real estate debt to multiple SMEs, mid-market, and VC-backed companies. We have done close to 2,000 crores worth of transactions. Logistic remains a very high focus area for us because one of our key LPs is from the logistics space. So there's something that we really follow closely. Our idea is to keep looking at technology-based businesses who are really making a large impact to this fragmented business. And we are always looking for the next interesting deal which could help them grow to the next level. I think that should give a broad about what we are doing at BlackSoil.
Thanks, Ankur. Pankaj?
Hello, everybody, and thank you very much, Bitan, for organizing this, setting this up along with Siddharth. Quick introduction. I am the Managing Director for Bertelsmann India Investments. Bertelsmann, as some of you may know, is one of the fairly large media services education conglomerate on the planet. In our core operating business in Europe, we would probably on the supply chain side have more than $1 billion of revenue. And on the venture side across the globe, whether it's India, China, Brazil, or the US markets, we have various investments in the sector. In India, we specifically have a couple of investments in Shiprocket and Let's Transport, and logistics hence continues to be an area of interest for us as investments.
Thanks, Pankaj. Sushane, to round off the introductions, please.
Sure, Bitan. Hi, everyone. This is Sushane. I'm part of the investment team at Gaja Capital. We are a leading mid-market private equity firm. We've been operating in the Indian market for about 15 years now. We've made close to 25 investments, and currently we are working out of our 4th fund, which is a $400 billion fund. Logistics tech is an area of deep interest for us. One of our most recent investments was in a company called ExpressBees, which is one of the leaders in the B2C express delivery segment. And we're looking to do a lot more in that particular space. I'm glad to be part of this panel today and look forward to this engaging discussion.
Thanks, Sushane. What I'll do is very quickly set the context for the discussion today and then jump into a bit of a theme-based discussion, on the very topic that we have. Very quickly, I was originally thinking maybe share a few slides, but instead of going down that path, probably reserve more time for the discussion itself. Actually, let me do it. I think the screen sharing has just been enabled. But just in terms of setting the context, I think what we are looking at as an industry is something that's about $200 billion today, growing at a very fast clip. Of 10% per annum projected growth, getting to $300 billion size, and just from a overall global landscape perspective, still lots and lots of opportunity out there for everyone. And if we just broadly split this out, I think what we'll see is a large bulk of logistics is in the road sector in India. Close to 80% of it, and within that again another 80% in the full truckload segment, amongst the many business models, the many segments that exist. Within this, I think two bits to call out. I think the express logistics and the 3PL, and these are some themes we'll pick up in the discussion today as well, that these are small sized, but relatively, if we look at the growth percentages, I think these are areas that promise significant growth. And it'll be good to invite thoughts from the panelists today around how they see the overall sector shape up. Again, as we just saw on the previous page, I think many different and diverse business models. The traditional setups in logistics in India have been very asset heavy, strong execution focused, and that's more the FTL, LTL, rail, coastal. These are more emerging segments. These, as a percentage of the logistics spend in India, is still very small. And then we've got the ones now around express 3PL, which are asset light. There's a lot more value addition, a lot of innovation that's happening in this space and solving fundamental problems that seem to be taking the logistics space forward. Chart, many or most of you who dabble in this space would have seen that I think there is a cost disadvantage that exists in India on the logistics space, and hence the opportunity. And I think if we look at this 4% bit, and we will touch upon this in one of the themes for the discussion today around some of the existing challenges and roadblocks, but I think some of the inefficiencies around suboptimal modal mix that we have, the longer leads or the average distances that one still travels, and issues around fundamental inefficiency in the system around pilferage, theft, damage, etc., which continues, all of which constitutes this 4% delta that we see to developed nations from a logistics cost perspective. A lot of changes, reforms that have been happening in this space, many different ones. I mean, the most one of the more recent ones being the National Infra Pipeline. That's been the significant 111 lakh crore investment that was announced by the government. And beyond that, the national logistics policy, many forward-looking initiatives have been taken. But I think from a fundamental structure of the way the business and the sector is organized in India, I think challenges do continue, which would be good to hear from the panelists today in terms of what we see. From our vantage point, how we still see, lots of active players in this segment. I think there are 5 key differentiating factors that we think people are looking at actively to differentiate themselves. One is, the service providers who are building much more nimbler networks to take advantage of both the spread of the opportunity, looking at newer centers as well as capitalizing on the changes, adding on more specialized offerings to the core segments, continuously expanding the value pool through value-added services and the value play that's there in different elements, using the power of data and analytics to have more predictive and dynamic capabilities, and finally also looking at the skilling perspective of it and innovative solutions around both talent and skilling in terms of moving forward. I think I just want to lay the context from this perspective and having a view of what might be some of the opportunities that are there in this space. And on that note, just wanted to shift into the core discussion between us as we get along now. And the first theme that I really wanted to pick on, for the panelists today is that the logistics space, as we see, is large. I mean, by no stretch of imagination is this a small space, dominated quite heavily by transportation. Within that, the road segment. We see smaller segments, such as warehousing itself or the overall storage aspect of it, 3PL, which are much smaller in nature today. From your vantage point as investors, as people who study this space, do you still think that the bulk and the majority of the growth would continue to come from the same segments, or do you feel disproportionate opportunity? We saw some higher growth rates for express logistics, 3PL, etc. How would those segments shape up, and what might be some of the key driving factors or the differentiators for some of the new growth to come in this segment? Would start off with Ashish. Would invite your comments on that, please.
Bitan, and again, your chart kind of alluded to it. I mean, clearly it's a no-brainer that anything that is related to e-commerce, right? E-commerce or direct-to-consumer brands and home deliveries. That's where the growth will be, because that's where the demand is. So, I mean, if you look at the different subsegments, clearly express logistics, while being small, is going to accelerate further. If I look at the cargo kind of long haul business, there clearly the part truckload or less than truckload segment is going to see higher growth. The third aspect, I would say, definitely in India, I mean, warehousing capabilities and infrastructure is still fairly average. So I think you are also going to see much higher growth again on the back of e-commerce and other things. For third-party warehouse management. So these would be multi-client facilities that are managed by some of these third-party warehouse providers. These could even be managed by some of the 3PL players who are now kind of trying to provide end-to-end solutions across transportation and warehousing and other things. So that's another area I think which is going to see a lot more growth, third-party warehouse management. I think the other interesting area I would highlight is, while a lot of the growth is coming in, highly dense, top 20 cities, I think clearly if you close your eyes and imagine where the growth is going to come from, it is going to be tier 2 and tier 3, and probably even on the rural areas. So one insight I just got, from one of our portfolio companies, Elastic Run, which essentially started the business in the, the first and last mile e-commerce delivery space, building a variable capacity kind of a network, to take care of the flex demand that typically e-commerce sees in peak season. But, they also got into the whole FMCG distribution space, but, kind of more into the tier 3 and rural areas. And one of the things that kind of sticks with me is, I mean, in India, they mentioned there are 10 to 12 million kiranas based on who you ask, right? And out of that, even the biggest distribution network, which in India would be, Hindustan Unilever, only directly touches 2 million of them. And we all know, I mean, what is that distribution network is kind of the gold class network that you would have. So I think there is going to be growth around that whole, building different kind of network design, which could be more in the nature of hub and spoke for that whole rural and tier 3 area. That's another area where I see a lot of growth that will come.
Fantastic. Thanks, Ashish. I think a few themes we clearly pick up. I think one being e-commerce. The second is the subscale infrastructure that you still mentioned on the warehousing part, right? And growth around new demand centers, and hence the active need to reconfigure networks. I think each of these three themes are good growth prongs that we see. Pankaj, you want to build upon that, or is there any other separate growth vector that you see beyond these 3-4 that Ashish also mentioned?
So first of all, I have to agree with Ashish 100% that logistics in our mind almost, and let me use this phrase loosely, it seems that we are in the wild, wild west, or wild, wild east, you may call it, of logistics. If you look at logistics as a sector, traditionally for the last 50 odd years, while significant improvement has happened in building of more roads, railways, etc., a lot of the tech innovation, services innovation has not happened. And there is an opportunity for most entrepreneurs, either who are already running logistics business or people who are getting into logistics business, to organize that market and make it a lot more efficient. But then you yourself talked about significant inefficiencies, almost up to 4% of our GDP, which kind of exist in the country. Most of the developed countries, whether it look at Germany and so on, typically operate at logistics cost as a percent of GDP as about 8 to 9%. In India, that's almost 4 percentage points extra. So that itself is one big theme that most entrepreneurs should be attacking to kind of fix it. Number two, if we look at the market per se, and not repeating what Ashish mentioned, all of those are extremely large opportunities. Most of those markets are highly fragmented. And organizing that market either with a wrapper of tech, which we call as the tech-enabled businesses, or in general real innovation around it, are extremely large opportunities that we are seeing entrepreneurs build. And within that, of course, some segments will grow at 100, 150% for those specific businesses. Sectors may grow at 30, 35% and so on. But there are others who may even grow faster. So we are generally very excited, and we're looking at really these strong secular tailwinds which are coming in the logistics sectors by virtue of either organization of the sector or building amazing technology, which is making these efficiencies eventually or inefficiencies go away or become a lot better.
Perfect. I think innovation and technology, and the technology prong itself being one of the core pillars of today's discussion. Sushane, do you want to speak a little bit more and also elaborate a bit more, given your investments that you have on the e-commerce part of the logistics space, and how you see that space evolving, and maybe also a bit of a play on the innovation and the tech evolution that's happening for majority of the logistics service providers?
Sure, Bitan. And I would like to bring in another perspective on these inefficiencies and the cost of logistics that we speak about in India, right? If you peel the onion a bit, if you look through the layers, you'll realize that on the transportation bit, by the way, we are not that inefficient versus what we globally is a 6 to 7% kind of a cost. It's not very different in India. It's largely on the inventory and storage side where most of the inefficiencies exist. Right. So, I mean, compared to globally, where it's a 2 to 3% cost, it's about 6% in India. So that's the bigger part of the problem. So if I look at between the two large segments, for everyone to notice that on transportation, I mean, it will remain the core sector. It will remain the large sector. Within that, road will be prominent because roads offer a certain kind of flexibility in terms of the loads you transfer, the kind of places you're able to reach, and so on. But within the storage and inventory piece is where a major overhaul is waiting to happen, right? So from an overall macro perspective, that's where we see a lot of opportunity. But that being said, within transportation also there are various niches, and I think we've spoken about the express part of it, where we've done where our investment Express Bs also sits. That's an area which has evolved dramatically and has reached meaningful scale, even though it's a 3 to 4% of the overall market. Given in the context of numbers we're speaking, that's like a 25,000 crore number, right? So that is an area which has evolved with both on the B2B as the B2C side. And Bitan, like you were saying on the e-commerce bit, the customer's expectation on quality of service as well as the timeliness of delivery is changing. For the businesses also, they're looking for more and more solution providers than just transporters, right? So the expectation in the markets are also changing, which is giving rise to these new niches within the transportation market itself. And we believe that given the scale of these niches, I mean, there'll be opportunity in both the areas, transportation as well as storage. So we do see both of them evolving over the next decade or so.
Thanks for that perspective, Sushane, to get us started. Ankur, you want to round off your views on that question in terms of what you see driving growth for the sector going forward? Any specific nuanced opportunities sitting in there, which will also likely have disproportionate growth, or will it be the main core that will still constitute the bulk of the demand?
Yeah, so I totally agree with all my fellow panelists. There is, I think, absolutely no doubt in the possibility of the kind of growth opportunities we are all seeing in the market, and the kind of startups, the kind of efficiency they are trying to bring in this space. Where what is happening is, we know there is a lot of assets across the country, and how do we get them better utilized? Whether it is on the last mile segment, whether it's on the first mile segment, whether it's a warehousing segment, or whether it's your regular line haulage. There is a lot of inefficiencies out there. So anybody who's helping them get that extra 10-20% also improvement really means straight free cash flow for them. So across various places, I'm feeling that technology companies are going to play a huge role, and that adoption is going to be very important. And I think COVID was a good wake-up call for the entire sector. There was a digitization was long overdue, and now it's completely accelerated. I think a lot of technology elements, from IoT to fleet tracking systems to getting your driver analytics, big data around it, all these things are going to become not just thoughts, but they're going to start getting more and more implemented in the way the businesses are being run. We know that how e-commerce is anyways leading to growth in 3PL, going to see growth in warehousing, where the sector is growing more than 20%. We are going to see a lot of grade A quality stocks coming in terms of warehousing quality. So all those things are going to really improve the way our logistics has been handled, because everything is becoming hyper local, right? Everything has to be, the automation and the fulfillment has to happen quickly. Technology has to be incorporated in warehouses. So all the entire supply chain is going to be seeing a lot of action. And I think things like concepts of blockchains and all within supply chain is also going to be seeing a lot of adoption, because we feel the entire supply chain now needs to be completely digitized, and the way documents right now are being managed, the way documents are being exchanged, it cannot be done the way it's done physically, right? So a lot of these things have to get completely digitized, and these processes and systems are now going to be speaking to each other. Then it is lying between multiple stakeholders, and nobody knows what exactly is happening to them. So that supply chain visibility is going to become another critical viewpoint about how things are really shaping up, and many startups are focusing on it. We have heard of startups who are doing focusing on specifically on the vaccine part of it. We have heard of startups who are specifically focusing on just trade documents, because our entire logistics sector is so large. Anybody picks up one small niche also and digitizes that entire element, it's also is like a very large opportunity in place, right? So, and what we understand is, as long as you're helping your entire stakeholders make money, people are happy to join your platform. So it is more about figuring that way out to sort of show that there is a good way to make money for everybody and improve efficiencies, right? Because this is a cost center for everybody finally, right? So how do you, because always your client is always going to look to reduce your cost. So from that perspective, if you bring efficiency and you make money for everyone, then it becomes more interesting for the perspective of all the stakeholders involved.
Super. Thanks to panelists for kicking us off. I think there are 4 clear themes that emerge in terms of what will drive the growth of this sector. I think one fundamental in pandemic view that's come through, I think, is the whole digital revolution, the e-commerce, hence the nature and demand from customers changing and shaping the logistics industry. We spoke about, I think Sushane mentioned the specific aspect of peeling the onion, looking at storage and inventory, where there's, I think, larger inefficiency versus just pure transportation. And hence the whole aspect of improving the subscale, the fragmented, as well as the quality of infrastructure in areas such as storage, warehousing, which require improvement. I think Pankaj had referred, along with Ashish, in terms of just the subscale nature of the business, the high fragmentation that's there, that needs to go away. And I think towards the end, I think we really spoke about inefficiency itself being an opportunity, for the industry, and which is where innovation, technology, bulk of different solutions would actually propel the industry forward. Just shifting focus to the next theme, which is more around the roadblocks and challenges that we foresee in the industry. We spoke about fragmentation. We spoke about the subscale and poor quality of infrastructure that still continues in large parts of the value chain. What might be a few others? And Ankur, if I could have you kick off the discussion on this theme, what might be some of the other challenges and roadblocks that you see in terms of even achieving what I showed as potentially a 10% growth rate number? Is 10% real? Do you think it might be more than that? And are there any other weak links, beyond the apparent, that are waiting to get exposed, which are hidden by larger issues such as subscale infrastructure or fragmentation? Your perspective on that?
I think the one that comes top to my mind is the fact that the people who are involved in logistics at the ground level, they need a lot of training. There is a lot of skilled personnel requirement is there. The laborers who are working are quite underskilled. Sometimes they're overworked as well. For them to make efficient, an entire process needs to be there. We need to just not focus on the asset part of it, but even the resources part of it. The human capital as well is going to be very, very critical. And training of the logistics staff, and how do you ensure that they also get their payments on time, is also very critical, because at the end, a lot of brunt is being faced by these people. A lot of these companies are facing high labor turnover. We always hear about large attritions happening there. So a lot of training also is required to be able to adopt this kind of businesses that we're talking about, right? Because finally, even if the top management wants to do certain kind of thing in large enterprises or even logistic companies, if their middle management and lower level management are not ready to incorporate that or use it, it's going to be always a problem, right? So that brings to my second challenge, which I feel is the actual adoption. Because finally the automation of these processes is still at a very nascent stage, right? All the concepts from RFID to warehouse management systems, it is still not available at pan India. We cannot be very confident about that it is being utilized across the country. So we have still that fragmentation sort of also leads to an issue around this aspect. And on the third, I believe we have a lot of dependence only on the road transportation, right? We are not been able to really utilize fully our waterways, or even utilize a rail transport to that full extent. So there's a lot of possibility of improvement of a lot of cargo movement from that as well. Our issues around, there will always be some issues around the way the government have always a lot of documentation requirement of various issues around the kind of compliances that have to be followed, the kind of paperwork that needs to be done to complete assignments and consignments, whether it's around cross-border or whether it is around a port as well, or whether it is crossing states. So there are those small issues are always there that also hindered the entire growth of the overall business. And little bit from the finance side, I would say there is always a lot of challenge around working capital for a lot of these companies that face on the logistic industry side. They're always having issues around working capital. A lot of our banks and NBFCs are not really able to underwrite these businesses because a lot of them are asset light, are not necessarily having hard assets like vehicles to always give as collateral. So they have like a working capital issues also if they want to grow. So this is sort of some of the issues that have come to my mind that I thought I'll just bring to the table.
Sure, Ankur. Sushane, Pankaj, any one of you just want to go in and also lend your perspective on this alongside the other roadblocks, challenges that Ankur mentioned?
Sure, I can bring in a couple of points, Bitan. And building on what Ankur said, traditionally this is an industry which is typically scored low on ESG in terms of all the parameters we have, which is whether on the labor side or on the environmental side. So I think there is a need for step up that needs to be done there. And within our own investments also, while there are business goals, obviously there are goals around this front as well that we've put specifically as targets to be achieved. A few examples, for example, the female workforce participation is very low across the sector, which is cultural and by the nature of the industry as well, right? Typically you'll have maybe 5-10% kind of a participation, even in many of the new age companies, right? So that's one area that needs to be solved for. Similarly, on the sustainability side, like we've been discussing at length, transportation within that road is a prominent sector. And as I gave a view earlier, it will remain prominent. It is not the most efficient of sectors from a fuel usage perspective or cost efficiency perspective. And that leads to its own issues, right? I think fuel costs are up by almost 30% during the year. Given the fragmented nature of the industry, it's expected close to 50,000 to a lakh truck drivers could be out of job, given that most of them are single truck owners, right? So there are no cost efficiencies that they have built into their network. So that's also something that needs to be solved. There is a lot of activity happening on the electric vehicle side, a lot of it also on the consumer side, with many new age companies coming in. We've been hearing about Tesla's plans. There is Ola, who's supposed to get into four-wheelers soon, right? So I think that segment is evolving. Those problems are getting addressed, but I think we'll need to do it faster. Some of these mission statements will need to evolve into specific targets. And we're hoping, at least in our portfolio companies, we'll be able to achieve that.
Fantastic. A very interesting perspective on ESG that you lend, Sushane. Pankaj, would just want to invite your thoughts. I mean, and there was a question, I think, from one of the attendees early on as well, prior to the session around electrification of the automotive segment and how it would impact the transportation and logistics sector. I mean, is that a concept we are still far away from an India perspective? Even activity in this space, if one looks at, I think there's a lot more innovation forward thinking that's already started in the developed markets around use of electric vehicles, maybe for short dispatches, etc. But your perspective on that, I mean, is that a concern for you as you look at investments and look at some of the firms here and the opportunities therein?
So we do think that mobility, and whether it's e-mobility, whether that will intersect with logistics, definitely it will, right? Will it happen in the next few years? Perhaps not. But will it happen in the 5 to 10 year view? Absolutely, 110%. We'll see a very massive electric movement, which kind of further goes into logistics also. And when we like to club at least three big concepts together in that technology field. One is mobility, second is drones, and third is other IoT devices, which make vehicles smart. And hopefully by virtue of being smart, they are more efficient and so on. So if I look at this entire kind of bucket, then we do see massive amount of opportunities coming in the 5 to 10 year horizon. And of course, starting a lot more with the bigger cities where these first mobility will get deployed, and then they'll go into logistics sectors. I don't think you'll end up seeing electric vehicles running in villages, etc., where electricity itself is a big challenge and so on. So there is India 1 and there's India 3. India 1 being the big cities, India 2 being the smaller cities, and India 3 being villages. If mobility and IoT etc. in the beginning, I feel that it's more India 1, India 2 concept. Although in a 5 to 10-year period, we would think that it would go there eventually as well.
Got it. Ashish, just want to round up with your perspectives on this theme before jumping into the third one. But any other challenges, roadblocks that you see from a growth perspective beyond what's been spoken, and any views on this whole ESG plus the whole sustainability angle itself going forward?
I mean, maybe I'll just give the analogy. I mean, like for logistics to work, right, in a perfect manner, I think the best thing I can think of is, let's take a high performance athlete, right? So there is a, kind of the brain part, which is essentially, do you have, if you're a cricketer, I mean, do you have a cricketing brain, right? There is the body part. You need to have certain physical, fitness and attributes. And the third is the motivation part. And when I look, kind of slice and dice logistics, to me, the brain part, I think we are starting to make progress, which is, all the, technologies we are harnessing, or I mean, still early days, but in terms of whether it is dynamic network management or supply demand optimization and IoT and machine learning, things of that nature. So second part is what I said, the physical fitness part. That is today the bottleneck, which is essentially, ultimately in logistics, you need to go from A to B, right? Irrespective of whatever kind of brain you have. So coming back to the analogy, I mean, like if the roads, there is a, the roads are not good, or if the ports are not good, or if the clearing capability or warehousing is not good, irrespective of whatever cricketing brain you have, you can't perform. And frankly, the third part, motivation, is, in terms of skilling, right? You need to be taught. So I think, to me, I mean, if I look at this, the real, I mean, in my mind, the bottleneck, and the government is doing a lot on that, is how to make sure that, things can move more efficiently. There are lesser bottlenecks, both from a physical standpoint as well as from process standpoint. And, if these three things come together, that's where you basically get a high performance athlete. And in this example, a high, India moving up, hopefully the logistics index, where the last I checked, India was 40 plus in that list.
Perfect. Thanks, Ashish, for rounding that off. I think we spoke about people and skills as one of the key aspects as we triggered off this discussion on challenges and roadblocks. And I think we brought the discussion back to the same point, that is, one very critical and necessary enabler for the success. Beyond that, I think infrastructure really is the other part that you continue to mention, that I think is something that is critical to to debottleneck, to unlock more potential. You might have created infrastructure, but I think even the maintenance of the infrastructure is a critical element that one needs to look at on a continuous basis, and its continuous upgrade over a period of time. I think very interestingly, we touched upon the aspects of ESG and e-mobility as well coming into this. I think these are topics not of the future. I think they are very much there across all of it. I think as one theme, I think climate sustainability that has unfortunately taken a bit of a backseat as the pandemic unfolded. It's been there, but I think there could have been more focus, and I think that's one bit even for this industry that is relevant, and one would need to keep look into it as we move forward. I think shifting gears a bit more into getting into the investor's mind, and we've got 4 of such minds here. That as you look at opportunities within the individual stages of the value chain, and for me, who's still a bit more of the student of the logistics industry space, as we look at, I think what we do see is that there is a lot of activity, a lot of startup activity, a lot of, at times it seems like the space is getting crowded. There are many players coming in, and if we just focus on e-commerce, or express logistics itself. And probably I'll get started with you, Sushane, on this. I mean, given the nature of activity that you see, many players coming in, how do you all actually evaluate opportunities that you see, evaluate some of the investee companies, as in companies who might be seeking investments? Is the preference always for the 1 or 2 first movers in there who have taken the bulk of the opportunity, because there are a bunch of Me Too's that also seem to come up at some point with some differentiation, of course? And then there are some very point-specific opportunities or niche players for whom, by definition, it seems the addressable base will be small, right? But between these two, three different types, do you think there is space for everyone to grow, or do you think there will, always be some consolidation, some will fall along the path, and your preference, or in terms of your investment thesis, in terms of looking at one or two of the types only?
Sure, Bitan. So one thing, and we've talked about it earlier in this discussion, the size of the pie is pretty large, right? So even if you're talking of 2%, 3% of the market being expressed, which is, for example, you gave as an example, many people's interests lie because it's a sector growing at 25, 30%. That still means a sector which is more than 20,000 crores in size, right? If I just separate it into B2B, B2C, that still means B2C, B2B individually are more than 10,000 crores in size. So the point I'm trying to make is that there are within these sectors, subsectors, which have enough scale to support 2 to 4 players in each one of these niches, right? So the fact that you see so many startups popping up, it doesn't mean, obviously there is a bit of an over enthusiasm, but it still has a lot of space for players to operate. Each one of these individual niches could support, between 3 to 4 large players. And given that we're talking of a logistics business, and I think someone mentioned the point, it's finally about transporting from point A to point B, right? Network plays a huge role. So as players start off in a sector and build their networks, not only are they, so they're building it unit by unit, but as they're growing and increasing the number of units, they're improving the profitability of each unit, right? It's a network play. So from that aspect, I would say a player which is fourth or fifth in the market, certainly not the first mover, but late to the game, it'll serve them much better to look elsewhere, given there are so many inefficiencies within the larger logistics ecosystem, rather than try to compete and build their network against some of these prominent, well-entrenched players, right? And so from our perspective also, when we look at a lot of investments, we've never, let's say, had an issue with the scale. We are a growth investor. So the kind of companies we look at, we've always been comfortable with the scale at which most of these companies have been operating. Our focus has been largely on unit economics. What share from that inefficiency are you taking? What value you're creating, and what share from that are you taking? So that translates into the unit economics, and how deeply are you using technology to solve the problem? So I think those have been the key levers. Scale, not so much in the kind of opportunities we've evaluated. And when we made our investment, for example, in ExpressBees, it checked all of these boxes. Some of the other interesting models, and many people here have investments in fellow panelists have investments in those sectors. Last mile logistics which serve a certain category within the industry, right? Related to maybe construction, maybe pharma. These are maybe some of the other areas where we've been looking seriously, evaluating interesting investments.
Perfect. Thanks, Sushane. I think very interesting perspective. Ankur, your thoughts in terms of how you look at investment opportunities, maybe profile some of these similar belief, or some different masala or tarka to it.
Similar to definitely what Sushane was saying. So the way I look at it is that first mover companies always attract more interest, right? Because it piques the investors' mind, and if they are already at a certain scale where they are showing that their business model is actually working, they're able to really attract a lot of capital. What happens is later on is that people, obviously, when you start doing something well, there's a lot of competition. People start trying to copy paste a similar model and start doing the similar thing. But that may not attract investors if they're just doing exactly what they are trying to do, and it's only if they're trying to play a pricing game, because there you can see that they are not really adding a lot of value. But sometimes you can learn from the mistakes of the first mover advantage, right? You can see they have made certain mistakes. They have used the capital of the investors and made mistakes, expensive mistakes, and you can use that to improve your business model. And sometimes you even go in different geographies and use a similar model. So that happens to, again, attract an investor, because, you're not exactly competing in the same market or in different markets altogether. And we all know that some player in northern market may be very strong, may not do well in southern markets, and vice versa, right? So it's a very regional play also sometimes it becomes, but even the region itself can become very large. So I'm just giving you an example. There are some of these logistic companies that only focus on, for example, the eastern part of the country, right? Because that shows that there is a very different market there, the different way to approach it, but they may be doing something which is very similar to somebody who's doing pan-India. Because they've gone to a different geography and doing different use cases, then it becomes again interesting from the perspective of an investor. As long as you have a scalable model, you're using technology well, you have good unit economics, then it becomes interesting from investor perspective. So in a nutshell, if you want to attract investor or you want to attract further funding to grow to the business to the next level, it cannot be just following the top two players, because then it becomes very difficult. How do you sort of select between these guys, right? Because already there is so much action happening with the guys who really taken a lot of funding. But if there are, as Sushane pointed out, there are enough sub segments within logistics space, and if you are able to really solve the problem for the customer, there will be no reason for you to find a problem of finding a capital to be able to take your business to the next level.
Shifting the nature of the question a little bit, Ashish, I wanted to also ask. I mean, one is obviously the investor side of the view and looking at these opportunities, but for many of your investee companies, you would also want them to be pushing in different sectors with a certain target set of companies in terms of selling their services. If one were to think of it from, and there would be in the audience, hopefully, many people from organizations who are users of logistics service providers in this new age of logistics that we see come through in India. What would be your advice to them when for a specific problem for theirs, right? And if we just take transportation management systems as maybe an option or one specific problem area, there are 3-4 of these players who are vying, to grab that opportunity. I mean, how should one evaluate them, look at them? Should you just be using a pilot-based approach, a POC-based approach, or think of other mechanisms in terms of getting in and contract?
I think, a few pieces of advice. One is, again, if you are late, I think somebody alluded to it. Do not try to go head to head with somebody who has raised a lot of capital and probably continue to raise a lot of capital. That's a losing game in my mind. So eventually, either you have to pick your niche, and the niche doesn't necessarily mean, you could actually, in this whole ecosystem, there are a lot of partnerships that happen as well. So as there is, as companies are designing their networks, everything is not proprietary. There are a bunch of partnerships that come in. So you could have a particular niche where, whether it's a geographic or whether it could be a different segment, or a different, kind of approach to things. So that's one idea. I think partnerships could be good play in this sector. I think second is, while I think within the kind of the VC funded companies, generally the favor would be for asset light companies. Obviously, we all understand that, a lot of good businesses, and they may not be billion-dollar businesses, but a lot of good businesses can be built, which may not be asset light. Eventually, somebody needs to have the asset. Otherwise, what are you going to do with the platform? So that's the other thing. I think warehousing, I feel, is again a great opportunity where, people who have some experience and, are a little bit tech savvy in terms of making sure that they hardwire the software part well. I think they can partner with a lot of players. So those would be a few things. I think again, to reiterate, trying to do what others are doing without having the kind of capital, without having the kind of investor base which is willing to look at cash burn while the network and the investments are being done. I think that's a losing game, and at least personally, I would never want to go head to head in that game.
Got it, Ashish. Pankaj, shifting to you, and there's one of the questions we see in the chat, which is a cue for potentially the fourth and the last theme we also had for the discussion between us. That's really on some of the key technology trends, which many would believe we've still not seen come in a big way in the Indian logistics industry. I think the adoption of high quality warehouses, warehouse automation itself, drone-based logistics. I think all of these we still, haven't really seen come through in India in a big manner. Are these the opportunities, or would it be more in the form of the analytics layer, or using technology such as blockchain, etc., which you see moving the logistics industry move forward? Where would your mind be biased in terms of what technology advances we really see shape the logistics industry over the next, maybe 3 to 5 years first, and then over 10 years?
Got it. No, so very, very interesting kind of question. And the way at least we bifurcated, and let me kind of talk a little bit of a framework that we use to kind of think about this. In our minds, on one axis, let's put manufacturers, marketplace slash distributors, and SaaS players on one side. And on the other side, you can put all the verticals of logistics. And if you start kind of thinking about, let's say, manufacturer in a courier business or an express business could be express bees and deliveries and others. Marketplaces, Shiprocket. Then there's a bunch of people who are building SaaS businesses, etc. Also, which are all technology layer. The first big problem that we are trying to solve is fundamentally organization of this market. Till you can build this into an organized player, you can't sell technology in a very massive fashion to either unorganized people or people who have less appreciation of technology, or they don't have the means to take those technologies as a trend to it. So first, definitely you need to have the bulk of the big part of the or scale of the business to kind of adopt some of the larger technologies that we're talking about. So we definitely see a lot of manufacturers getting built, whether it's on the warehousing side. We feel that a lot more private equity players should come, team up with people and build large warehouses so that capacity utilization can be managed in a proper fashion. We do feel that on the express side, we are seeing significant amount of innovation from really good companies like Express Bees, Deliveries, etc., etc. And on the parallel, we are also seeing marketplaces, businesses getting built, which are aggregating those guys, putting analytics layers, putting technology layers, matching demand and supply layers on top, and kind of building that business. Once a lot of that is built, you of course have a lot of SaaS businesses which also are emerging at the same time, which are purely selling technology tools. This could be a vendor management system going to a Pepsi or a Coke and others, or in anything in between. It could also be a lot of analytic tools, etc., which are going to small people so that they can behave like big people. Let's say there's a small seller, and the small seller doesn't have the wherewithal to compete with the Amazon, the Flipkart. What all tools he or she would need to actually deliver the goods at the same quality level, service quality level, as some of the big boys? And there's a lot of tools and technologies which are kind of getting built for that. We feel for the next 3 to 5 years, within this framework, these three type of businesses would kind of end up building extremely large businesses. On the back of organization of businesses, now that that's kind of happened, the next set of innovations come in, which we call as logistics innovation 3.0, this being 2.0, and what we saw probably in the last 10 odd years was 1.0. In 3.0, of course, mobility, IoT, analytics, devices going into the and chips, etc., going into either warehouses to make automated warehouses, which honestly get warehouses to look like Harry Potter movies and things flying off the shelf, etc. All of things will come, but that's a 5 to 10 year vision. First, we need to organize the market, and we see massive innovation and opportunity existing today doing that at least.
Interesting. Many different thoughts, and I think the SaaS space, etc. One of the key things where in a asset-light manner, many people are trying to achieve a lot of opportunity. Sushane, wanted to invite your thoughts on this topic.
Sure. Broadly in line with, as Pankaj was mentioning, that typically, if you look at the broader logistics marketplace, I mean, people have been focusing on tech more on from an operational excellence point of view, meant to improve your KPIs, SLAs, rather than building it as a core or a moat for yourself, right? That is something which is slowly changing. Similarly, I think the focus has been on building technology in-house rather than outsourcing it, utilizing various third-party solutions. That is also seeing some sort of a drift. And as more and more of these solutions are available through the SaaS model, right, that's also kind of making it easier, because people can be flexible about it. They can do it sooner, quicker, without a lot of investment. So with a lot of support from the ecosystem and how the players themselves are evolving, I think we are in a good shape. In no way I would say handicapped if you compare it to that there is no innovation on the tech side that we have kind of completely overlooked or missed. I think we are a bit behind on the curve, and maybe that's where the investors are also seeing the opportunity, that this is where we're not handicapped behind the curve, so this is maybe the right time to take a leap, right? We see a lot of growth in a lot of such segments. Some of the interesting models that we've been seeing here is, and some of those have been mentioned in this discussion. For example, on-demand marketplaces, which are kind of organizing the fragmented supply. That's an interesting model, various companies being built around it. Similarly, logistics software platform for the SME customers specifically, right? which is where Pankaj was mentioning, people are evolving. A lot of the pandemic has taken a lot of people online, right? So it's not only about the large customers, enterprises. A lot of the smaller players are now selling online with the advent of e-commerce and over the last 12 months. So solutions are being built for those specific customers. Similarly, on the SaaS side, whether it's about route optimization or predictive planning, few companies around those models also are some which have piqued our interest.
Perfect, great. I think what we'll do is I do see a set of questions in the chat window as well, and maybe I will come across to one of you to help answer that. And if any of the others have a perspective on that, do feel free to jump in. But there's one question here from Siddharth Menda, and Ashish, just wanted your thoughts on this. The question is, given how rapidly supply chains have been evolving, large bit of it due to shifts in domestic consumption, evolution of the road and rail network as well, what risks do you see when 3PLs and e-com operators build out their networks, right? And this is also a question I've often gotten, as I've spoken to a lot of the startups, that when do we design the solution for? I mean, it's just evolving so fast. Every 12 months, 18 months, there's a large change. What thoughts and advice would you have for that?
I mean, see, yes, it is evolving fast, but again, these changes happen over a period of time. And great companies, I mean, eventually, not only look at what the need of today is, but they are also thinking about designing for the future. And then, as and when either the hardware improves, right? Tomorrow, if in India has a lot of, let's say, multimodal parks, right? There are dedicated freight corridors and bunch of other things. Then you essentially continue building for the future. So today, I mean, again, when Intel is designing a chip in 1990, I mean, yes, the processing power will go up, but you will continue designing and evolving and improving based on how things evolve. And frankly, I don't believe the change happens that quickly. I mean, it has taken us years and years to come here. And even if you go to Western countries, I mean, bulk, despite a lot of talk, the bulk of logistics is probably 80% similar to what it was 15 years back. So you just have to kind of look around the curve and think ahead, and then keep on changing your designs and your capability, as the market evolves.
Perfect. Thanks, Ashish. Any of the other panelists who want to take that network question?
Yes, I would like to come in. And, this is something we're doing with ExpressBees also. They've used this model beautifully. I mean, you can build your model with flexibility and maybe on an Uberized fashion, right? Where it's kind of outsourced, it's not capital intensive for you. And you can flex it as required through the, ups and downs of the demand. So for example, in ExpressBees, our last mile logistics is almost 80 to 90% outsourced in a way, right? So that gives us the kind of comfort that we've not spent a lot of money building it. We can maybe align it to the demand, through the year, across years, as we see the market evolving. And now we're following similar kind of models across our network, right? There's line haul, there is first mile, last mile. So now we're taking it to the other parts of the chain as well, and seeing how flexible can we make it, in a wholesome manner across the chain. So I think that's also an interesting way to kind of deal with the unpredictable nature which Siddharth, I think, was referring to.
Fair enough. One other question, and Ankur, maybe you want to draw your attention to it if you can. This is the question on import-export logistics that you see from one of the attendees, that the entry barriers here are extremely high. And if anyone is specifically looking to organize this market, how could one overcome entry barriers? Ankur, any perspectives from you, or would request any of the other panelists to jump in as well?
Sure. As in, I think the question is quite apt because we know that there are a lot of CHAs, a lot of various businesses, freight forwarders involved in this business. And there are a lot of issues around that entire supply chain aspect of it. And I think globally, a lot of work is happening around the trade finance as well, and trying to use blockchain as well. So if one has to look at this opportunity itself, so I think it's important to understand the customers that you're trying to deal with. What are the use cases that you're looking for? And if there is a way that we can deliver the same thing in a more efficient manner, and the real problems of the ground, if we just understand them, and why somebody is not able to attract them. That is where one has to sort of really understand. A lot of times what happens, and we have seen what startups are able to do, is try to solve the problem in a very simple manner, but somebody has not yet thought about it. It's a matter of somebody taking that step and really trying to do it in a way that actually the entire ecosystem is able to work with. So I feel it's about trying to see the use case, who the customer is, how their problem can be solved, and it offers, because of course if it's imports and export, right? So then you have to also work with the counterpart on the other side as well, and they should be also be able to use the same product on the same side, right? So a lot of work has been happening by shipping lines on that front, right? Because a lot of digitization has happened on their end. A lot of freight forwarders are used to using their systems and processes when you're knowing how the bill of ladings, etc., are moving. But finally, there is still a lot of work that can be done around that. So I think it is to go in a little bit more detail. One has to see exactly the kind of use case that one could like look at solving it.
Sure. Thoughts from any of the others?
Yeah, I mean, we have made one investment in the Exim kind of a platform space. That's probably the only, institutionally funded player from a new age standpoint. And I do agree. I mean, there are a lot of entry barriers, and both I think that requires not only capital, but it requires a lot of, I think, know-how. I think Ankur was alluding to. I mean, dealing with shipping lines and custom clearance, and the freight forwarders and container freight stations. And I mean, if you haven't been to a port, you haven't seen nothing yet. I mean, there could be things that are just sitting there because papers have to move from A to B to C, right? So it is it does have some capital requirement and good level of domain understanding, but that's where the opportunity is, right? The size of the prize is also large if somebody can crack it.
Yeah. Another question here, on the ESG plank as such, many large players have been realigning their supply chain management systems towards green and sustainable ecosystems. What would be your views regarding the nature of financing options, incentives, any collaboration options available for intermediate players like fleet management companies, 3PLs, which enable the migration, to such green and sustainable ecosystems, given quite often there would also be a significant quantum of investment available. So any thoughts, leads, clues from any one of you, very helpful on that front.
Yeah, I would just maybe mention a comment there for Bhavya that, unfortunately, the ecosystem also has to kind of evolve for, the players to build some of these options into their businesses, right? And the cost is high, right? There is no two ways about it. And for the sector, as I think Ankur earlier mentioned, it is difficult to get all kinds of financing options which are typically available. So that is an issue. I agree, but obviously no one's wanting you to convert 100% of your network to sustainable, let's say on the transportation side or in any other metric in the business, right? So even for well-funded large companies, some of which we have partnered with, I think taking some small goals that 5-10% of your fleet, for example, could be built on electric vehicles. Similarly, some small goals on the other side could be well enough to poise even a smaller player, right? Well, in the eyes of enterprises who are wanting sustainability as a real option. So I think you don't need to do it all on day one. You could do it in a stepwise manner, and that still shows intent and kind of get you to where you want over a longer time frame.
There's a follow-up question on that from Siddharth again, that, do you see encouragement from your LPs to allocate a certain amount of the assets under management to only those opportunities that meet certain ESG criteria?
Yeah, certainly. I mean, but the business case always has to make sense, right? And for us, ESG, and specifically speaking for Gaja, ESG is not really an option. I mean, it's something as a parameter that has to be fulfilled across all our investments. Like I said, in some cases, the workout is a bit more to take them to global levels of ESG or match it with some of the other industries which have done well on those parameters. But it's not really an option where we can allocate less or greater amounts of money. I think it's one of the check boxes that needs to be there for us to say yes to an investment. So yes, there is growing attractiveness of ESG as one of the parameters, and specifically for us, that is paramount.
Yeah, just adding to that and having a slightly more global slash Western view to the problem, a lot of the large clients for us in our operating business where we run supply chain businesses for them have very stringent ESG and similar guidelines for us. So, and I feel that while a lot of that has not come into India yet, in the next 5 to 10 years, I would definitely think that would come, and especially the large multinational companies where headquarters are giving them very strong mandates to work with ESG compliant partners, and most of the logistic companies would then become partners for such people. This will become a very big topic going forward. In my mind, at least 3 to 5 years, we will see the emergence of ESG coming in as a very strong topic in the logistics scene in India.
I agree. And if I may add, I mean, like my primary sponsor, Temasek, they just signed along with BlackRock. They're launching $1 billion kind of a late stage decarbonization fund, which is essentially kind of a fund of funds, which will primarily focus on putting money in funds which have that focus. But I think, as Pankaj alluded to, I think all of us are keeping an eye on that. But I think it's still some time away when significant amount of capital will come primarily on ESG focus, though we do already have a few kind of a sustainability and ESG focused funds, but it's a very niche space.
So I would like to sort of add or maybe even differ to some of my panelists in that aspect. So I think ESG and logistics, I think it goes hand in hand in a long way, especially the startups, the way they are coming in, because I feel they're adding a lot of opportunities for existing asset creators to create more income. So it is actually adding more livelihood to them, and also improving efficiencies. And there are some of these logistic companies who are also focused on how they can use their brain power and their understanding of the customer pain points to create solutions around efficiencies. So for example, we have one of our portfolio companies called Hulisol, and one of the businesses they started off was designing tractors in a way that the packaging happens. They're able to improve efficiency of the number of equipment they can put inside the container without damaging it, and at the same time get green carbon credits also for the customer, right? So there are a lot of these issues that a customer has, and if anybody is able to solve for it, those guys will actually score very high in terms of the potential investors who are sort of looking for it. So I believe that this is, I think, as a concept, it's important, and I've been saying this even for other places where I've been speaking or sharing my thoughts around, that I think after COVID, ESG should sort of now become a very key criteria as we look at any opportunities, right? Because only capitalism cannot really take our world to where we are, right? And we understand the importance of logistics. It has played the way the world has shaped. So I feel this ESG can become a very like logistics can really take advantage of ESG from the fact the way they are able to take care of very important aspects of the way our country or economy is running.
Pankaj, there was one call out for you on the chat. If you could take this question from Prakhar Singh, who's also the CEO of TMOS. That hyper-local B2B delivery market is still not having many startups providing service rather than SaaS. So isn't hyper-local open still for logistics 1.0? And I think this refers to your classification in terms of the 3 stages of evolution of the technology that you see. And that the fact that there aren't many players providing B2B delivery service, e-commerce companies generally have their own delivery fleet. So what is the opportunity that you see in the B2B hyperlocal space?
So no, it's a very good question, and at least our experiences in the last, I would say 2014 to 17 period, we saw emergence of a lot of hyper local delivery services. Um, Unfortunately, a lot of them folded shop. And the reason why they folded shop was they did not get enough demand to justify the cost of their operations. Having said that, some of them which have emerged and they continue to do the work in a slightly more cost efficient basis will continue to thrive. At the end of the day, the problem is when you're going from, let's say, point A and point B, as Ashish was saying, if and that point A is Delhi and point B is Mumbai, there is enough amount of distance to make sure that enough earning is made for the driver and the and depreciation of the truck and so on. But in terms of hyper local, where the distances are as small as 15 kilometers going to 5 kilometers, there may not be that much amount of income capability. For that, the density of demand plays a very big factor in determining whether the business will be successful or not. And I think while some of the businesses are doing well, as we see massive amount of adoption of technology services getting used, more hyper local businesses can come in, but it's not an infinite market, and only quality players who can have control on cost can win such a market.
Got it. One question again called out specifically for you, Sushane, and that pertains to your investee company, XpressBees. In terms of how is it really different from the other competitors? So I think if you, in whichever way you are comfortable sharing that bit of information, helpful.
Yeah. So Kshitij, maybe I could take a few areas where I can highlight, where I could answer your question. See, firstly, like I said, the space is large, so it's not like two people. While XpressBees was the third player to the market, there was enough juice in the space for them to create their own space in the whole ecosystem. And the way they did it is, let's say the other 2 or 3 players started with some sort of an anchor customer, right? Because in many of these enterprise-led businesses, that's one of the ways you could start. Similarly, there was a whole cohort of customers which the larger players at that point of time were not serving, and XpressBees saw an opportunity there. In fact, the core customer, the anchor customer they had started with was FirstCry, right? And then with the service levels they had, there were a bunch of other enterprise customers who happily signed up to their proposition. And there are certain nuances. While at the end of the day, you may say a lot of these are much more evolved, large e-commerce customers. Still, between an Amazon, a Flipkart, or let's say everyone else, right? There are certain nuances where you can do better for your customers, keep them happier across service parameters. So I think that's where, and it's a much more evolved discussion to be had on that, right? How they were able to do it, but the fact was they were. And if you look at the top 20 e-commerce customers, majority of them have a greater wallet share with XpressBees as we sit today, right? They were able to do that really well. And on the operational side, and I referred to it earlier, they've been able to follow an approach of Uberization, which is outsourcing a large part of what they do to other players and infra which is already present in the market. What that has enabled them to do is be more efficient with capital, be more flexible and faster to the market, which is rather than setting up your own offices and your own agency, you can really use the network which is already there and leverage these micro entrepreneurs to kind of build your network, both on the first mile as well as the last mile. So I think these two, one is on the demand side, the other more on the supply side. These were the two basic differences that they leveraged to kind of be where they are today.
Got it, Sushane. Thanks. One question, Ashish, maybe you want to take this. This is from Rohit Singh, who's the CEO of eParivahan. He says he's running a family-owned SaaS business in logistics automation based out of the eastern part of the country. 3 years old, ARR of 7 to 8 million. What advice would you have for him in terms of the type of investors to help him raise funds for his growth and add on to the portfolio?
So again, without knowing specifics beyond the ARR, you just have to go out and do a little bit of homework of what if this is the first institutional round. You are looking at probably talking to early stage investors, and frankly, it's the question for the investor. 9 times out of 10 is very simple. Is this a large enough opportunity? And do you have enough differentiation where you can come in and build it? And if based on the performance and more the vision of how this could be, 100 million ARR, I think if you are able to excite investors, I think there is a lot of capital out there. I think a lot of people think, raising capital is tough, which it is, but you have to understand all of the investors on, which are on the panel. We only get paid to put money to work, right? So essentially, there's a lot of capital that is waiting to get deployed. It's a question of demonstrating that this could be a large opportunity, and you just have to reach out and start engaging. And there's no other secret sauce here.
Sure.
And Rohit could start with the 4 of us, I guess.
I think I'm first of all, I must add $7 to $8 million in 3 years is a really, really good number, guys.
Yeah.
And congratulations for putting that business together. Number two, as our knowledge of SaaS business go, technically it should not require a lot of money to grow. If it's already reached $7 or $8 million, you probably may not be needing too much money. So the question is, do you even need an investor? And if you really need an investor, then of course get a banker. And I think in 3 years, if you reached here, then you're probably doing something right.
And I'm like, if it's a true SaaS business, because these days SaaS definition of SaaS revenues and ARRs are also different, but it's a true SaaS business with $7 to $8 million with the kind of multiples that are available. I think there is a lot of investor demand.
I think Pankaj, to the earlier point around hyperlocal and hyperlocal B2B, I think two questions still there. One from Krishna Kotak, chairman of the JM Bakshi Group, and Somajit Rai Borman, who's the founder of DropGo. Around one being from Krishna around, have hyperlocal delivery companies made cash profits yet, or what stage of profitability are they in? And Somajit's question around the view on micro local delivery market and its evolution and whether it will get accepted at some point. Those being two questions out there.
So number one, I think we have not made any specific investments in hyper-local delivery businesses yet. Our challenge has been that we want to see high density of demand to make those investments. Having said that, there are businesses which we respect a lot, business like Shadowfax. Ashish, is that your investment?
Yeah, we have done something there, yeah, before.
Can you then take over the question and talk about the profitability of
Yeah,
that?
yeah. I mean, without getting into specifics, I mean, we have actually seen a number of hyper local delivery companies. I think it's safe to say with the growth that is happening, I mean, at a net level, probably I don't see anybody who would be at a net profit level, but given the growth and the investments they're putting in. But if you start looking at some specific markets where, to Pankaj's point, the density is there and they have some vintage, I mean, that's the market, their home market. Or so I've already seen in a number of companies where, at least in some of their core markets, they are able to generate, kind of positive margins. So essentially, that's what investors typically look for, saying with the right level of density, can you get to, kind of a profitable model. But at a net level, at least I haven't seen anything which is net profitable given the growth and the expansion.
Got it. That's helpful. I think there's one open question from Venkatesh, CEO of GlobeLink. The key challenge for any LSP in India is getting their invoices settled on time by customers. A tech-enabled LSP will always face that challenge when it comes to the question of scalability or proving the scalability of the business model. That is the reason for many companies like Flexport or Photo having successfully scaled up in the Western world. What might be the solution for this inherent efficiency in the Indian market? Ankur, do you want to take a stab at that?
Yeah, sure. So yeah, I think logistic industry is always having issues around receivables, right, across the entire value chain. And that's why people who are really built large businesses have built it around strong clients. So I think even if you're building a technology business, if you're offering credit to them, it's not possible to do it to every Tom, Dick, and Harry. So you need to have your internal processes and systems and underwriting in place to be able to find the right customer set that you want to work with. Where they are also not working capital stress. It's like if you're working in the infrastructure sector, you cannot be working with companies who are already going to be reaching NCLT state. So you need to be having that kind of checks and balances in place before taking a customer on board. You need to assign those kind of credit limits, work with your own data, see how they are doing it. And there are a lot of data out there right now where people do use very efficiently to be able to at least assess whether you want to take a credit on that, right? So that I think goes without saying that it's very important even from an investor perspective when we are looking at any companies which have a B2B angle, that the kind of enterprise customers they have, what is the receivable quality they have. So this was a very important key metric I feel from a logistic business perspective, that you cannot just be building GMV without margins or building receivables or just building the GMV without collections, to put it that way. Otherwise, very easy to build GMV in logistic business if you start reducing your pricing, etc. So that I think is a key differentiator whether you are really adding value to your customer, because if you are, they will really clear your bills finally. It cannot take forever that they will not be really finally not paying it or not.
They probably, Siddharth, you should guide us in terms of the time left for the discussion. A couple of panelists have a stop at 5:30, but maybe one or two more we can take from the set here. There's a question from Siddharth Menda, who's the director RMZ Corp. One of his earlier questions we had answered. The question pertains to last mile warehousing and the fact that it sees dearth of quality options for contract logistics and e-commerce operators, leading to inefficiencies in the hands of the operator. Would one of you like to just shed more light on the challenges and any opportunities you see specifically from a last mile warehousing?
So I can, yeah, sorry, Ashish, please go ahead.
I just wanted to add, I mean, again, last mile warehousing is a kind of not a standard concept, but I definitely see a lot of opportunity in, kind of what is called like dark warehouses, which are closer to, customer concentration areas. And this is happening as we speak in certain markets, because the requirement has become a lot more dynamic in whether it's e-commerce or other things, where platforms are now able to promise a 2-hour delivery, and I'm talking about high moving SKUs, not long tail items, or at least a same day delivery is become like standard in certain markets where people expect that. So I think there is a lot of opportunity for people putting smaller modular warehouses which are closer to these kind of customer, whether it could be in places in Mumbai or Gurgaon or all the big cities. So I think that has a lot of opportunity in my mind.
Yes. So just to add, I actually seen one company which was doing in the same space. So they were struggling for like 3-4 years, but I think after the pandemic, they have got like a real booster, and all the big e-commerce companies now from big baskets of the world, everybody started lining up to work with them because, as Ashish mentioned, all these 2-hour delivery, 4-hour delivery, or within the same day delivery is becoming the normal. So it's a large opportunity, and this company specifically started seeing a lot of demand for their activity, and they have been doing this within large cities, small 5-10,000 square feet kind of even small warehouses, and a lot of small customers who are a lot of now again started lining up. So it is a large requirement from grocery to e-commerce kind of space, looking for this kind of a requirement they are seeing in their business models.
Sure, I think we'll just take one last question. And I know there are 5 open ones, but maybe we'll not be able to do justice to all, but take one more. This is from Chetan, who owns a technology startup called Fleet Management. His question is that his observation is that many logistics tech companies have stopped focusing just on India, given the challenges in convincing old school business owners to pay for the services, and is quoted the examples of potentially Locus, Farai, Loginext, and are focusing on international markets. Is that the right approach for startups? I think as I pass this on to one of you to react, my quick reaction to that on some of this would be that I think people are also wanting to look at additional opportunity spaces, right? Which is why they would have also started looking at other geos, not necessarily for lack of success or not being able to convince, but would love to hear reactions from the others.
I mean, if I may start, I mean, frankly, it's just a matter of, investors or founders. I mean, they follow the money, right? So when you look at SaaS businesses, eventually, the kind of average contract values, per user kind of rates that you can get. I mean, so you can build out of India and you can eventually get, 10x higher, rates. And that reason is also simple. And it's not only for SaaS, but, we had a company out of India called, Gray Orange, right? Which is into warehouse automation, a great company. When they started in India, so this was like their market, they worked with Flipkart and a few other large players, but eventually in India, you will find the cost of labor is very small, right? So eventually, if you build a product which is going to be around automation or SaaS, here you can throw bodies and you get to, 90% there. In the US, in the North American market, if you can take out, 2 bodies and make it more efficient, that's $100,000. So I think it's more to do with, just the economics But eventually, I think you will find some solutions that will be coming out here. But that's the primary reason in my mind.
Thanks, Ashish. I think on that note, probably I'll just close for now. I think we'd encourage you to reach out individually or through Blue Circle to any of the others, including myself. I mean, happy to engage. Siddharth, do you just want to bring this to a close for the day?
So certainly, thank you very much, sirs. Such an insightful and engaging conversation, and a privilege to hear you all. And thank you very much, Mr. Datta. Very well moderated. Our leaders and I have taken home several nuggets from today's conversation, and I, of course, wish we had more time. And thank you to our leaders in the audience for joining in large numbers and for staying till the end and for always sharing excellent questions. For the questions that may have not been addressed due to paucity of time, I will share the relevant ones with the leaders on the panel and take and request some of their time for it. We will also try to share and post the answers in the community app as well. So along with our weekly webinars and our publication, we are taking these discussions and conversations on the exclusive community app curated for senior leaders across our focus sectors, which are logistics, real estate, e-mobility, energy, healthcare, aerospace, and defense. So whether you would like to engage with us on our platform as learners and leaders are invited to join the logistics circle and also get access to the other allied circles on the platform. I've shared the app link in the chat box and will also be emailing the invitations to you all shortly. So thank you very much, sirs, once again. We look forward to having more such discussions in the future, and please do stay safe.
Thank you very much.
Thank you, Siddharth.
Thank you.